Mr. Johnson is our lender relations specialist. He is an expert in small business, and he is an uber expert. Rod, I'm now giving you the uber expert on the current PPP and EIDL resources. He has been a real source of light and a breaker of confusion with regard to these PPP and EIDL sources. He has been on many of the deputy mayor's economic recovery weekly check-ins, and we continue to tap on his expertise as we are really trying to make sure that small businesses are gaining access to these critical resources. So, Rod, thank you so much for joining, and then we're going to turn it over to you.
All right. Well, thank you, Christy, for having me on again. Good afternoon, business owners in Washington, D.C. I am so excited to be with you guys today. And here's why. Because there is money out there, particularly from the Small Business Administration, to assist you business owners with growing and sustaining your businesses. And I am urging you, all of you, to please get off of the sidelines and apply. As you know, there was $284 billion that the ex-president approved on December 27th at 5:30 p.m., right, to replenish the PPP program. Now, as of today, there is $200 billion left, and we're just 3 weeks into the program. As you know, the program ends on March 31st of this year, 2021, okay? Now, I'm going to give you a quick recap of what happened the first week. Now, your congressman heard you, because what did they hear? That women and minority-owned businesses did not have the opportunity to participate in PPP, what I'm calling PPP 1.0. So from January 11th through, I guess, was January 18th, the community banks and the CDFIs had opened their portals for women and minority-owned companies to be able to get the money first, okay? Before any other banks, anyone else could apply, the CDFIs and the community banks defined as 1 million in assets and below, okay? And it was specifically tailored for women and minority-owned companies. Then it wasn't until January 19th that all the other portals were open. So like I said, now there's $200 billion left until either the money runs out or the program ends on March 31st, 2021. So let's go to the next slide, please. So what we're going to do is first talk about the qualifications for the second draw, the PPP 1.0. And for you procrastinators, right, the first draw for PPP, okay? Now, let's talk about the qualifications for the second draw. Now, businesses and nonprofits with 300 or fewer employees can borrow up to $2 million. I'm going to say again, your congressman heard you, right? Because you guys were worried about the Shake Shacks of the world, or Ruth Chris, and some of these other organizations, right? Because of the SBA size standards, that they were able to get money up to $10 million, and they took the majority of the funds, right? 500 or more employees, or according to their size standard, based on the NAICS code of 72, they could get, they could have more employees. Well, so this round, PPP 2.0, 300 employees or fewer can borrow up to $2 million, provided that you can show a decline in revenues, gross revenues of 25% in any one quarterly period when you compare 2020 to 2019. So here's an example. We're going to use September 30, okay, 2019 versus September 30, 2020. All you need to do is show a decline of 25%. I think most businesses in Washington, D.C. can easily show a 25% decline in their revenues because of this pandemic. So what you're going to do is whip out your income statement. That's all you need to do, is whip out your income statement, okay, from QuickBooks. to show the 25% decline in the revenue. Now, you're going to have to sign, as the majority owner, you're going to have to sign and date that income statement to show the veracity of the statements that you're going to be submitting to your bank for the second draw. So if you have QuickBooks statements, compiled statements by your CPA, or review quality financial statements by your CPA, as the majority owner, you must sign and date those statements, okay? Now, if you get audited financial statements by your CPA, you don't have to sign anything. But for most of you, that's not going to apply. So I wanted to give you that little tidbit because not too many people are talking about that on social media. All right, so let's go to PPP 1.0. So if you have an existing PPP, right, then you must have spent all of your PPP 1.0 money before you can get the PPP 2.0. Now you're going to have some banks that say, well, we want you to apply for the PPP 1 forgiveness. According to the law, you do not have to do that, okay? It's not a requirement. So as long as you use the money. Now, if you're close to using all the money and you don't know how to use it all, bonus the money to your employees, okay? And call it hazard pay, whether that's $250, $500, $1,000, okay? Bonus the money and call it hazard pay. Now, later on, I'm going to give you a second way in which you can use that money, but I don't want to confuse you right now. So for right now, bonus that money, use it all, and then apply for the PPP 2.0, okay? Now, for those of you that are procrastinators, and it's very rare that procrastination pays off, but in this case, it does. So if you never received a PPP loan, then you can apply for the current PPP loan per the original rules. So you can get a loan up to $10 million, okay? $10 million. And you can't have any more than 500 employees, okay? Now, overall, for PPP 1 and PPP 2, the rules still apply. 60%, right? 60% payroll, 40% for those business expenses that are allowable, okay? Next slide, please. All right. Wait a minute. Yeah, this is it. All right. So the loan amount, everybody's worried about what their loan amount is going to be. So this is the slide that tells you what it is. Okay. And I'm sure that you're gonna have access to the slides. If you need them, just email me at roderick.johnson@sba.gov. Okay. And I'm gonna send you out this presentation because this presentation is detailed as to how you calculate so that you can get your loan. All right, so it's 2.5 times your monthly average payroll in 2019 or 2020. Now, if I'm you, I'm going to choose the higher of the two calculations so that you can maximize the amount of money that you're going to receive, okay? So that's what you're going to do. Now, if you have a Schedule C, this is what you're going to do. You're going to take line 31, which is the net profit on your Schedule C, divide that by 12 times 2.5 times. That's your loan amount. Now, here's the question that I get all the time, okay? So what's included in payroll costs? Now, guys, we've been at this since April 2nd, 2020. So I'm thinking by now we know what's included in payroll costs, but it has been slightly expanded, okay, to include dental and life insurance, disability and life insurance, okay? But you can look at my example below. So, same as before, gross pay for U.S. residents, up to $100,000. Remember, you can't have over $100,000. Up to $100,000 per year, plus the employer share of insurance, which includes health, dental, vision, disability, and life. And you can see it here that I have it blocked off in red with the disability, right, and life. I even give you an example of 3, 5, and 6 employees. So you have your gross pay, your ceiling at $100,000, your health insurance, your retirement plan, right, the 401k stuff, your disability and life, right, and then your state unemployment. Don't forget the state unemployment, okay? What you'll see now is we have an average monthly payroll of, what is that, 25,633. Now remember that number, because later on in the slide, we're going to show you on the application how it works. All right. Now you're going to multiply that by 2.5 times, and you will get your loan amount. So this slide actually shows you how to calculate what you'll get just by, following the example that I've given you. Next slide, please. All right. So remember, I talked about the NAICS code and the restaurants. Well, here it is. So if you have a NAICS code of 72, which is restaurants and hotels, okay, then your calculation is going to be 3.5 times instead of 2.5 times. And all this arrow is just showing is that on your 1120, your 1120S, or your 1065, and even on your Schedule C, typically it's the second line up on the left-hand corner where you can find your NAICS code. For those of you that are in the restaurant and hospitality business, I've even given you kind of a schedule here, as you can see, of the various NAICS code where you can do 3.5 times your average monthly payroll. Okay, next slide, please. See, I'm trying to make it easy for the DC businesses. Now, same as before, and I just mentioned it, you must use 60% or more for payroll to obtain 100% loan forgiveness. Now, the 40% non-payroll expense, rent, utilities, interest on the mortgage, has been expanded, right? So let me go over that again. So if you remember in PPP 1.0, it was water, gas, electric, right? Business cell phone, business landline, business internet, transportation. Now we have 4 more categories that we can use PPP money on. 4 more expense categories. So operating expenses for like accounting, payroll, right? So accounting is the QuickBooks, okay? And the monthly fees to keep that going. And we have payroll services, Paycheck, Ceridian, Gusto, whomever you use, inventory tracking, all right? Or a CRM. So money can be used for those. What about property damage? If you remember doing the looting and those type of things downtown here in DC, well, there was property damage done. For any expenses that your insurance company does not cover, you can use PPP money for that now. Also, for worker protection expenses like COVID-19 testing, the face mask, the glass, putting up new drive-through barriers, things of that nature. You can use PPP money for that. And then for supply expenses like what? Inventory control, restocking fees, for your inventory. So now you have 4 new expense categories to use PPP money. Now listen closely, come in. All right, so if you have submitted your PPP 1.0 loan for forgiveness, you cannot go back and capture these new 4 classifications of expenses. But if you have not, right, if you have not applied for forgiveness, then you can go back. If you've already spent money on these 4 categories, you can go back, okay? Capture these expenses. And if you remember what I said earlier, if you hadn't used up all your PPP 1.0, now this is your second way, right, to be able to use your money. What did I say the first way was? Bonusing the money to your employees and call it hazard pay. And now this is the second way that you can go back, capture these 4 categories of expenses, and now you will have used all your PPP 1.0 money. All right, next slide, please. See, these are the type of things that you're not hearing in social media. All right, so the improvements for PPP forgiveness, real simple, right? We had 3 forms, the 3508S form, 3508EZ, and the 3508, what I call long form. Well, here's what the improvement has been. If you remember, the 3508 short form were for loans for for 50,000 and below. And what we found out in looking at the data, out of the $525 billion of PPP money that was put out there on August 8th, 87% of the loans were for $150,000 and below. So what we did was we changed the 3508S form to reflect that. So now it's a 1-pager, And then pages 2 and 3 are actually the instructions on how to fill out page 1. It shouldn't take you any more than 10 minutes to do that, folks. Okay? But you still have to provide the documentation that shows that your revenues have gone down by 25%. Here's another key, which I'll talk about later. The idle advance will not be deducted from your forgiveness amount. Okay? Now, flexible end date. You can choose 8 weeks or 24 weeks. Okay? But for PPP 1, it has been, your coverage period has been extended through March 31st, 2021. A lot of people were worried about December 31st, 2020. Right here, you see it, March 31st, 2021. Tax clarifications, I've gotten a lot of questions on this. This legislation has solved the issue. Forgiveness of loan is not reported as taxable income, okay, for federal purposes. And you can deduct the expenses paid using PPP loan money on your business tax return. All right. So this legislation solves those two issues. Next slide, please. All right. So this just tells you, gives you the expanded version of who's eligible now for PPP 2.0. Right. So you have 501c6s, destination marketing organizations, newspapers, TV, radio stations, public broadcasters are now eligible. Now, let's look closely at bankruptcy. If you have filed a Chapter 7 bankruptcy, you are not eligible for PPP, okay? However, if you are in a Chapter 11, you can obtain a first draw PPP. But keep in mind, the PPP loan supersedes or takes precedence over all the other creditors, okay, in that Chapter 11. So that's all you need to know about. That's really what this slide really covers, is the expanded, people that can now get PPP 2.0 and the detail about if you're in bankruptcy. Chapter 11 versus Chapter 7. Next slide, please. Love this stuff. All right. First come, first serve lending practices under both PPP and EIDL. Loan programs prevented businesses in underserved communities from obtaining these loans. Remember, I started out by saying that. At the top of the show. I'm getting old here. What's 15 billion and what is that other billion? 25. So that's $40 billion. $40 billion has been set aside. Businesses with 10 or fewer employees located in a mid-low income area who never received a PPP loan, there is $15 billion set aside. If the business with 10 or fewer employees located in mid to low income areas who did get a PPP loan and now want to get a second draw, there's $25 billion set aside, okay? So as I said, between the two, that's $40 billion has been set aside for businesses located in low to moderate income areas. The maximum loan amount is $250,000. The SBA will verify the information on your application, and you go to the CDFIs and the community banks and credit unions and SBA microloan intermediaries to get this money. Okay, next slide, please. Notice how the emphasis is now on businesses located in low to moderate income areas. Now, this slide is important. If you remember 5 slides back, we calculated what the average monthly payroll was going to be, which is what, $25,633. Now, remember, you multiply that number times 2.5, and you see your loan amount, right? 64,000, what is that, 092? Okay, so this slide and the slides five back, put those two together, you can see how to calculate your loan amount, okay? And as you can see, the second draw form is very easy to fill out. Folks, it'll only take you 5-10 minutes to do this, okay? But if you need assistance, there's PTAC, there's SCORE, Small Business Development Center at Howard University. There's Women Business Center. the VBOX, the Veteran Business Opportunity Centers. There's plenty of free assistance out there for you to apply for this money. I want you to go get the money. Next slide, please. All right. So here are a list of banks. I put the URLs here. If you do not have a banking relationship, which I hope most of you do, okay, that's another seminar. But for now, if you don't have another banking relation, if you do not have a banking relationship, here's the URL to go find a list of participating lenders, okay? And there's a list for fintechs that are also participating in the first draw and second draw, okay? Next slide, please. So let's talk about the PPP and EIDL. All right, so here we go. EIDL. If you recall, as a review, it's a loan, not a grant. 30-year loan, 2.75% interest rate for nonprofits, 3.75% for all others. Okay, unlike PPP, it is not a forgivable loan. Unlike PPP, where they're telling you 60 for payroll, 40 for other expenses, you have more flexibility on how to use the money. But no, you're not using the money to build a new website. You're not using the EIDL money to buy new equipment, okay? So just keep in mind, it's the same things or same expenses, business expenses, just like it is for PPP, all right? Now, businesses that are located in the US with less than 500 employees and need operating funds to offset what's happened with COVID-19. The maximum amount is $150,000. The loan amount above $25,000, you have to give a blanket lien on the assets of the business. If you've already had an EIDL and you want an increase, it gives you the email address and put increase in the subject line along with your current EIDL number. Okay, next slide, please. Now, businesses can qualify for the maximum EIDL grant. Now, you have to meet 2 qualifications, okay? 2. Unlike PPP, the business must have had more than a 30% drop in gross revenues, okay? As measured by over an 8-week period that falls between March 2nd, 2020 to December 31st, 2021, when the program expires compared to the same dates that fall between January 1, 2019 and March 1st, 2020. All right, so the first thing you got to do is show a drop, a 30% drop in revenues. Again, that's going to be your income statement that you're going to submit. Secondly, and you've heard me keep saying over and over, they're trying to target the money where businesses are located in low to moderate income areas. So businesses in a census tract where 20% or more of the population lives in poverty, or the median family income is 80% or less of statewide or metro-wide family income, right? And there's a link, I'll give you the URL, you just put in your zip code, and it'll tell you whether or not your business is located in that area, okay? Next slide, please. All right, businesses not in the low income community may be eligible, right, for the emergency EIDL grant. So here are the conditions. You received an EIDL loan, but never received the grant, okay? Or 2, you qualify for EIDL, but you never applied for either the loan or the grant. I don't know why anybody didn't, but you didn't. You didn't apply for the loan or the grant. So the SBA is going to actually verify the information that you submit. The SBA has 21 days to verify the information and put the payments in your business checking account. Again, $20 billion has been set aside for this, okay? So understand that. The SBA will be calling you. You won't be applying. The SBA will call you. All right, next slide, please. We're getting close to the end. All right, so here's what I'm really psyched about. So for 2 reasons. 1, if you currently have a 7A 504 or microloan, Hopefully your bank has already done this. It's supposed to automatically happen. The SBA on your behalf will pay principal and interest payments for 3 months on your existing SBA loan. Secondly, if your business is expanding and growing, you can apply for any of these SBA loans and you will not have to pay a fee. There is no SBA fee for using any of these loans, okay? If you go to the bank and you need a 7A loan, then the bank now gets a 90% guarantee instead of 75. If you get an SBA Express, the maximum loan amount has been increased from $350,000 to $1 million. And the bank gets a 75% guarantee instead of a 50% guarantee. Now, here's the thing I really like. The SBA will make payments on your behalf, principal and interest, for 6 months if you get a new microloan, 7A, or 504 loan. Okay, so what's there not to like? PPP, first draw, if you procrastinated, you can still get PPP up to $10 million. You got the PPP 1, now you apply for PPP 2, you can get up to $2 million. Okay, if you're in the right area, if you will, then you can get an EIDL grant. Okay, now you can use any of the 3 SBA products and not have to pay any SBA fees on new loans. If you have an existing SBA loan, the SBA will make principal and interest payments for 3 months. And if you get a new loan, the SBA will pay up to 6 months of principal and interest on the new loan for microloan 7A or 504 loan. Okay? The SBA is bending over backwards to help you business owners in Washington, D.C. Next slide, please. All right. You know what? I just talked about that. Go to the next slide. Thank you. The live event operators. Remember that loan? You've heard something about it, right? Okay. So places like the Warner Theater, the Kennedy Center, One Step Down, Blues Alley, the Improv, 930 Club, right? They now have access to this money. They must have been operational by February 29th of 2020, have less than 500 employees, okay? You cannot have received a PPP loan past December 26th of last year. The money has to be used the same as the regular PPP, 60% payroll, 40% for the expenses that we've mentioned before, okay? And include marketing, ads, staging, and other event costs. All right, go to the next slide, please. Now, there's going to be more to come on that because that program hasn't rolled out yet. So there's going to be more specifics on that. Now, as you know, the documentation signed on December 27th had 5,600 pages. What I have done for you by topic. So if you want to know about the 501c6 destination marketing organizations, that topic, you go to page 2100. If you want to know about targeted EIDL grants, you go to page 2184. Okay, for those of you that like long nighttime reading, I've given you the pages per topic to go actually read the legislation. Okay, next slide, please. All right, so for help, we already talked about it. Women Business Center, the VBOX, Howard University, SBDC, PTAC. Am I missing someone? SCORE, of course. All right, now, Office of Disaster Assistance. Disaster Customer Service at SBA.gov. You have the 1-800 number there, 800-659-2955. Next slide. We should be almost done. Avoid the scams, okay? If you see something that says SBA.com, you know it's not from me or the SBA. That's basically what that says. Next slide, please. That should be it. Oh, go to the next slide. We don't need to see that. We already talked about the budget, and that's it.